With the first quarter of the year over, let's take a look at some hydrogen stocks and see how they're performing. All of this on today's Hydrogen Podcast.
So the big questions in the energy industry today are, how is hydrogen the primary driving force behind the evolution of energy? Where is capital being deployed for hydrogen projects globally? And where are the best investment opportunities for early adopters who recognize the importance of hydrogen? I will address the critical issues and give you the information you need to deploy capital. Those are the questions that will unlock the potential of hydrogen, and this podcast will give you the answers. My name is Paul Rodden, and welcome to the Hydrogen Podcast.
In an article from Forbes.com, the Trefis team, which is a contributor to Forbes, writes, "The hydrogen theme is outperforming this year. Will the gains continue?" The Forbes theme of hydrogen economy stocks, which includes the stocks of U.S.-listed companies that sell hydrogen fuel cells, related renewable energy equipment, and supply hydrogen gas, has gained almost 3% year-to-date, compared to the S&P 500, which remains down by about 4% over the same period. While the broader markets and growth stocks in particular have been weighed down by tightening monetary policy, surging inflation, and the Russian invasion of Ukraine, hydrogen stocks are benefiting from a couple of trends. The ongoing military conflict is making countries more serious about energy independence. Brent crude prices briefly rose to levels over $125 per barrel in early March, although they have fallen back to levels of around $105 currently. There have also been increasing uncertainties about gas supplies, particularly in the EU, which imports over a third of its natural gas from Russia. The present crisis is proving to be a wake-up call of sorts for energy importing countries, which are now looking to double down on renewable energy and alternative energy sources as means of reducing dependence on imported hydrocarbons. Investors believe that hydrogen-related stocks could be big beneficiaries of this shift, while renewables such as solar and wind could be used to generate electricity and power light vehicles. Hydrogen-related technologies could be key for heavier applications, such as trucking, heating, and industrial applications such as cement and steel manufacturing. Separately, hydrogen can be used as a means of storing excess renewable energy generated from sources such as solar and wind. To be sure, this transition isn't going to happen overnight and is likely to be an ongoing process. Moreover, producing clean hydrogen is expensive, and governments will likely have to tweak policy and incentivize the sector. Now, within their theme, Bloom Energy, a company that sells solid oxide fuel cells for electricity generation, has been the best performer, with its stock rising over 9% year-to-date in 2022. On the other side, Cummins, an industrial company best known for its engines and power generation products, has been the weakest performer, with its stock declining about 6% year-to-date. And now, in a complimentary article in NASDAQ.com, Kailis Selinsky writes, "These two stocks are betting big on hydrogen fuel." The author writes, "Electric vehicles are becoming mainstream, and as the world's focus on climate change and cutting carbon footprint intensifies, the present Russia-Ukraine conflict and its impact on hydrocarbon prices has pushed this trend further. Names such as Tesla and NIO have the talk of the town on the EV space, with other major players taking steps towards EVs as well. Concurrently, another trend has been towards the development of hydrogen fuel as an alternative and a push for hydrogen-powered vehicles. Different companies across different geographies are working on the hydrogen economy. Toyota and Hyundai have developed fuel cell vehicles. Last month, Toyota announced a pilot project for the Mirai car in India. Saudi Arabia has announced the development of a $5 billion hydrogen fuel facility as the country looks to become a leading supplier of hydrogen. And Chevron is setting up hydrogen distribution centers in collaboration with a Japanese partner, with that Japanese partner being Iwatani. On the other hand, Elon Musk has called hydrogen fuel cells extremely silly, and fuel cells equal fool cells, that he said in the past. Between these two extremes, let's look deeper into two major names, being Plug Power and Fuel Cell Energy, which are focused on hydrogen fuel cells and see how they perform in the coming periods. Plug Power provides turnkey hydrogen fuel cell solutions for the green hydrogen ecosystem. It has deployed more than 50,000 systems for e-mobility and counts Amazon, BMW, and others, including Walmart, among its customers. Annual revenues are projected to jump from $502.3 million for 2021 to $1.4 billion for 2023. While profitability remains a concern, the company's net loss per share is expected to narrow to 22 cents per share in 2023 from 82 cents a share in 2021. Moreover, a look at the company's recent tie-ups can provide a glimpse of things to come. Korean electric car maker Edison Motors has tied up with Plug to bring an HFC-powered electric city bus to the market. Plug has also partnered with Atlas Copco, Mafi Trench Company, and Fives to develop hydrogen liquefaction plants. Hydrogen liquefaction makes the fuel easy to transport, leading to lower costs and a larger distribution reach. Plug is also the largest buyer of liquid hydrogen across the globe and aims to supply 500 tons per day of liquid green hydrogen by 2025. The company expects to double this figure by 2028. The market is betting big on alternative fuels as seen in the price per sales ratio of 31.5 for Plug, where the industry median is at 1.5. The company is investing heavily in future growth, which is indicated by its CapEx per sales ratio of 38.3%, which is over a 13x multiple of the industry median of 2.7%. Now, Morgan Stanley's Stephen Bird has reiterated a buy rating on the stock alongside a price target of $60. Overall, the street is bullish on Plug based on 10 buys and 3 holds, and a strong buy consensus rating and a price target of $40.77, implying a potential upside of 32.33%. The other name on the NASDAQ radar, FuelCell Energy, manufactures proprietary fuel cell technology platforms and targets large-scale power users. The company also offers sub-megawatt solutions for smaller power users in Europe. Annual revenues are estimated to increase to $160 million in 2023 from $69.6 million in 2021. In its most recent first quarter showing, FuelCell witnessed a 113.7% year-over-year jump in its top line to $31.8 million. At the end of January, FuelCell had a backlog of $1.31 billion, which provides visibility into future revenues. Moreover, the company is also developing a unique carbon capture solution in joint development with ExxonMobil Research and Engineering Company. The solution is designed to capture carbon dioxide, nitrous oxide, and sulfur oxide, and particulates from an external source while concurrently yielding power and hydrogen. Notably, the company is focusing on driving commercial availability of its advanced technologies solutions, which include distributed hydrogen via electrolysis, long-duration energy storage, and carbon capture. FuelCell's price-to-sales ratio of 23.1 indicates investors will have to pay less in the stock for each dollar of sales generated by the company as compared to Plug. Additionally, the CapEx-to-sales ratio of 97.6% implies that FuelCell is heavily investing in the future growth as compared to Plug. Okay, so 2 very interesting articles highlighting the year-to-date stock performance of a handful of hydrogen companies. Now, before I dive too far into this, please note that I am not a stock expert, but even I know good numbers when I see them. And one thing I would like to do is go over the hydrogen economy stocks on the Trefis portfolio. These stocks include SunPower, First Solar, Cummins, Bloom Energy, and FuelCell Energy. And in this portfolio, it does show that at least this grouping of companies is significantly outperforming the S&P 500, gaining 3% this year to the S&P 500's return of -4%. Now, one trend that I'm seeing a lot of right now are these hydrogen companies partnering with off-taker companies, creating great symbiotic relationships and driving the hydrogen economy forward. As an example, Plug Power partnered with Airbus and announced a feasibility study with Airbus of bringing green hydrogen to mass air travel. And since that announcement was made, Plug Power's stock has jumped 21%. And going forward, I think a lot more of these deals will be reached. And smaller hydrogen-generating companies moving into and then past their demonstration phase of their technology. So as more and more of these demonstration projects become valid and showcase real economic methods of generating hydrogen, I believe that the industry will start seeing even more rapid growth, especially as we see more companies like Suncor exiting wind and solar and focusing on hydrogen and renewable fuels. All right, that's it for me, everyone. If you have a second, I would really appreciate it if you could leave a good review on whatever platform it is that you listen to. Apple Podcasts, Spotify, Google. That would be a tremendous help to the show. And as always, if you ever have any feedback, you're always welcome to email me directly at info@thehydrogenpodcast.com. And as always, take care, stay safe, I'll talk to you later.
Hey, this is Paul. I hope you liked this podcast. If you did and want to hear more, I'd appreciate it if you would either subscribe to this channel on YouTube or connect with your favorite platform through my website at www.thehydrogenpodcast.com. Thanks for listening. I very much appreciate it. Have a great day.